For exporters, any sale is a gift until payment is received. For importers, any payment is a donation until goods are received. Successful exporters and importers recognize this conundrum and are able to negotiate payment terms that recognize the inherent risk, yet meet the needs of both parties. Today I'll explain open account. But first, make sure you subscribe to this channel so you don't miss any of our basics of exporting videos, sharing practical advice for exporters and importers. There are 5 primary methods of payment in international trade. Some are more secure for the exporter, others for the importer. The key is finding the right balance. Today, let's consider open account. An open account transaction is a sale where the goods are shipped and delivered before payment is due, which is typically in 30, 60, or 90 days. Obviously, this option is advantageous to the importer in terms of cash flow and cost. It is a risky option for an exporter. Because of intense competition in export markets, foreign buyers often press exporters to use open account, and the extension of credit by the seller to the buyer is more common abroad. Therefore, exporters who are reluctant to extend credit may lose a sale to their competitors. Though open account terms will definitely enhance export competitiveness, exporters should thoroughly examine the political, economic, and commercial risks, as well as cultural influences, to ensure that payment will be received in full and on time. Exporters can substantially mitigate the risk of non-payment by using one of the following trade finance techniques. Exporters who lack sufficient funds to extend open accounts to potential international customers need export working capital financing that covers the entire cash cycle, from the purchase of raw materials through the ultimate collection of the sales proceeds. Export working capital facilities, which are generally secured by personal guarantees, assets, or receivables, can be structured to support the export sales in the form of a loan or a revolving line of credit. The U.S. Small Business Administration and the U.S. Export-Import Bank offer programs that guarantee export working capital funds granted by participating lenders to U.S. exporters. With those programs, U.S. exporters can obtain needed funds from commercial lenders when financing is otherwise not available or when their borrowing capacity needs to be increased. Export credit insurance provides protection against commercial losses, such as default, insolvency, or bankruptcy, and political losses, such as war, nationalization, or non-convertible currency. Insurance also provides security for banks that are providing working capital and financing exports. Factoring in international trade is the discounting of short-term receivables up to 180 days. The exporter transfers title to their short-term foreign accounts receivable to a factoring house for cash at a discount from the face value. It allows an exporter to ship on open account as the factoring house assumes the financial liability of the importer to pay and handles collections on the receivables. Factoring houses most commonly work with exports of consumer goods. At first glance, selling to international customers under an open account may seem too risky to even consider, but there are enough potential advantages that it may make sense under the right circumstances. It can make an exporter's products more competitive and may even allow them to charge more for their goods. If you still have concerns, watch our other videos to learn about other methods of payment to find one that feels right for your exports, or download our free trade finance guide to compare all 5 methods. You'll find a link below. If you liked this video, like it, share it, and make sure you're subscribed to our channel. Watch for more videos sharing real practical advice about export documentation, compliance, and the latest changes affecting exporters. You'll also find hundreds of articles about every aspect of exporting on our blog, shippingsolutions.com/blog. You'll find a link below.